All right, welcome everyone. Welcome to 2025, the Hurley Investments Market View Commentary. Just as a reminder, and I'm going to put it right at the top, next week, Monday, is President's Day. So the commentary, I'm going to buy a new computer, is Tuesday. And I will make that adjustment as soon as we're done. Excuse me for the cough. I'm getting over COVID. But next Monday is President's Day, so we're going to not have our commentary on Monday. We will run it on Tuesday. And that should be Tuesday the 21st. 01/21. All right. Second matter of business. Martin Luther Day is in February. Russ, this is Martin Luther Day, so it's Martin Luther Day. Thank you. Russ is trying to say, Kevin, you got the wrong holiday. My bad. Luther King Day. So thank you. Thank you very much, Russ, for correcting me. So then what's the one in February? February is President's Day. I've got them mixed up. All right. Thank you very much, Russ. So I give the correct honor to the correct people. Okay. Number two. Right now, head to the handouts. In the handouts, I have my price targets for stocks that we're looking at, some new stocks that we have thought about, and I've also got down here more towards the bottom some newer opportunities. And I'm going to go through a couple of these because some I obviously just don't agree with. It's pretty neat. I agree, and I think I can see Apple coming up to 347 here. People look at my Amazon number and they're like, Kevin, Amazon trades so much higher than that. It has so much opportunity. And I will be the first one to somewhat agree. And I am biased. When you're coming to look at these predictions, there is a bias to it. And people are saying, Kevin, it's already trading at 218. Yes, I don't think Amazon will get past 262. I think on the low side, they can drop down to 162. On the high side, I'm already giving them the high side of 262.50. I'm using a relatively high PE. I'm using their forward next year's earnings. I'm not giving them the full 46.56. I just can't do it. They're not profitable enough to give them that. So the target price, I think, could be 262. I think it's foolish. I don't think they belong at a 262. Kevin, they're already at 218. Someone let me know they were kind of a little ticked off when I was sharing Amazon, which I do think is a little bit funny. But the comment that was made to me was, they've already traded as high as 233. they're going to go to $500. Well, if I change my different target high, and I go even with their highest valuation and their highest PE used, I can only come to 291. This is where I judge people. I judge people in that, hey, I know you'd like to see Amazon go to 500. Yes, maybe they will double in their stock price. I can't make the numbers work. These are the same numbers that people use all the time in institutional trading. And if I can't make the institutional traders numbers work, as much as you would like to use your hope, there's not a number you could use that show me it's going to get to that it's going to get to 500. You would have to change their current PE ratio and put it up to like 70. You're still not there. You'd have to put it up to 90. Nope, it was 80. The number was 80. And there you are at 500. There's no way you can justify a current P of 46.56, a forward P dropping 12 points to 34.76 future times earnings on such thin margins that Amazon has, and tell me that they should trade of a forward earnings of 80 times their current profit. They don't have that profit potential in their business. Those numbers are ludicrous. This is what every education misses. They won't sit and work and do the hard numbers. I have pages and pages of yellow worksheets and numbers. On here, I'm only giving you 75. If you want, I've got another 675 you can look at. I went through about 710 different stocks this year over my Christmas break. A lot of crunching numbers, a lot of putting this in here. This is also why I enjoy some Chinese stocks. Baidu 12.86, 10.78. I used a PE of 22, very low. Earnings per share, 9.08. Next year's future earnings, 10.86. It's trading below the low target price, below the high target price. Kevin, check your target prices out. All I'm doing is taking the high next year's earnings against the PE that I want to use. I come in at 238.26. Target low, lowest PE, which is the forward PE against the lowest earnings per share, comes at 97. They're trading at $78. That's a 22% increase. On their highest PE, I'm taking the highest earnings per share. On their highest PE, it comes out to 139, almost 100% return from where it's currently trading. This speaks to me. This is what I understand. This is what I would be using to justify getting into a stock. All righty. Let's see. There are a couple more I want to show you. Costco. Someone asked me a while back, man, Costco's just fallen off the earth. Yeah, they went up to like $110, dropped all the way back down to 900. Costco is currently trading at 924. 924 is the target high for Costco. That is why I probably would not be looking into getting into Costco. My target price is higher than that. It's 1,080. I'm giving them highest PE, highest next year earnings per share. Yes, I would be outside, but I'm not thinking Costco is going to go to 1,500. Let me look at Disney. Very interesting, right? Kevin, how can you have a target price outside of your target high? Well, the PE ratios were 39 to 19. I gave it a 40 because I consider it to have its movie section and its media section, I think, are valued higher than just its park section. I gave it a little bit for you. I gave it just on the high PE. Earnings per share 261. Earnings per share in the next year 517. When you take the 517 that I used against the 40, I get 206.80. It's traded there before. Moana 2 is going to be another billion-dollar movie. Their movies are their cash cows. That is the ability and beauty of Disney. It was just really poorly run. Now, going back, my target high, I have to use the numbers that the pros are using. Yes, I'm making my own up, but not far off. 39.9 forward PE, or the current PE, earnings next year, I come up with 203.65. Am I going to be pissed off if Disney only gets to 203.65 instead of 206? Currently trading at 108, right? Am I going to be ticked off if it only goes up $94 instead of $97 in the next year? No, I won't. I won't be ticked off. I'll learn to live with it. But these are the numbers that show me, and if you look at last year's, it is shocking how close those numbers are. Kevin, you're way out of bounds on Google. Your target high on Google, boy, I made a couple mistakes here. Your target high on Google is 213, but you have a price of 249, almost 250. How did you do it? I kicked the PE on Google up by 4 points. So I could put it on the low end of technology, up there at that 27, 28, 29 to 35 range. Technology is using that 27 to 39. I kicked it up 4 points. Using next year's earnings, that's how I've got to Google being up 249.29 above the target high of 213.33. It has beat it a ton of years running. You're going to say the same thing on Meta. Although Meta's numbers don't look right. I've done so many of these, they just look like they're all the same thing. I need to go back and check. Yep. Let me make my quick changes, please. I didn't do this one correctly. Still doing a 35, but their earnings growth. 0.28. So there you go. Thank you. That's how I get Meta so much higher, is I put it on the high end of the range of 35 versus the middle. And that's how I come up with Meta being as high as 884. So this is unlocked. You're welcome to play with it on your own. But please go to the handout section and you should be able to download the handout that is this Excel spreadsheet. If I can just tease Jeffrey Dunyan one more time. He has talked to me about Palantir. P of 325, forward P of 136. Not very much earnings. Earnings is 20 cents to 47 cents. He thinks it's going to skyrocket. I can't make the numbers work. Palantir, PLTR. Don't see it. Can't come up with it. No numbers that I use make it above a $65 stock. And I just, for the life of me, I can't make it work. I can't find a number that justifies this thing just being a $300 stock. Too wide of a range, too big of a spread. I just can't come up with it. So my suggestion, work your Palantir numbers, work the spreadsheet. You'll find it very interesting, but I'm coming up to, again, these same themes. How to erase my drawings. Same themes for next year. Oil and energy will be down as they, come on, lose purchasing power as the floodgates open up. Drill, baby, drill means you'll lose purchasing power because we're going to flood our markets and world markets with more oil. That will take away the pricing power from the Middle East. I don't see those happening. Deregulation already and will continue to help financials. Kevin, how can you say that? Look at who's coming into presidency. Someone that owns real estate, someone that wants the financials to be able to borrow. Someone who is now a 34-time convicted felon that the judge has agreed to no jail time and no penalties. which I don't understand what that means. But as I look through how big money borrows money, I can't see how Trump did anything wrong. I just can't. With that said, do I think he'll be helping himself? Of course I do. I think every politician does. I don't think there's a politician alive that doesn't go into office and doesn't help themselves out. Cut a deal. After they're done, they get paid, millions of dollars. I think that is where our political system is corrupt. They are not public servants. They are getting bought off. That is why personally I thought I would enjoy someone like a Mitt Romney or a Trump in office. I feel that maybe they can't be bought off, but that doesn't mean that they're not going to help themselves. Last but not least, more tariffs, maybe. He has in place what he wants in place. They've worked so well that the Democrats didn't take them off. Do I think he'll slap a couple extra tariffs on? You better believe I do. Anyone have an idea where you might slap some more tariffs on China at? Where might Trump put some more tariffs on China? No ideas? No one wants to take a venture out? Autos. I agree. Autos and electronic vehicles. Stuart, you said chips. I think we're already there. I don't know if he'd put more on. In fact, if anything, depending on how much the CHIP Act increases our chip production, I'm not sure if it's in his best interest to up that on chips, maybe. But I think it'd be autos and EVs. I also think that there is a really interesting ability that that Musk might take one for the team. Just something to think about. Okay. Interesting article from a competitor advisor practice management. The ugly sweater of financial markets. I've gone over this for a couple weeks, but I want to do it one more time. The months of November, December, January are chock full of traditions. Family dinners, presents, tree cutting journeys, ugly sweater parties, and matching pajamas. They're all emblematic of this time of the year. In financial markets, the equivalent of the ugly sweater party is a making of market predictions for the year ahead. Sure, it's fun, they're cute, they grab attention, but ultimately they are useless and thus a waste of time. Yes, I'm aware I sound like Scrooge right now. Now, the difference in them being useless is the models that are based around moving or churning your stuff in and out of funds are based on each individual practices or each corporate prediction. So no, they're not useless or a waste of time because big money uses them for their models, and that's a number they're choking into their system on how and when to churn you out of positions. One need no look farther than 2024 to be reminded once again of the futility of market predictions. By some accounts, the average of 2024 forecast had the S&P index closing at 4,861. Yet in reality, the year closed with a benchmark index closing higher than 5880. That's narrow about 21% on average. Yikes. So, as I found a couple interesting parts I want to keep reading. Furthermore, we should not take for granted that investors will have the fortitude to sit through certain levels of volatility and drawdown, even if they are confident in the ultimate destination. Guys, 2008 ruined generations of investors. It ruined me as an investor for the sit and wait, the wait and hold theory. We can't do it anymore. Because we can't do it, I've gone to the safe option strategies way. I've gone to the collar trading way. The collar trade and the protective put always work. What they don't always do is follow a time frame. But the collar trading 100% always works because it makes something up on the way down. It adds more shares to your share count. It gives you the opportunity to weather those storms, even if those storms in some positions are lasting years, like Baidu, like Disney. It lasted a couple of years for Meta, but we had a good return. Excuse me. Even if it lasts a couple years, the collar trade, the process, the numbers, it always works 100% of the time. There's just not a time frame that you can stick or apply to the process. One of the biggest problems last year, and I've talked to a couple different people about this, sometimes what's even more emotion difficult than missing a rally is trying to figure out when to get back in. A lot of people booked a 9% return last year and spent 8 months out of the market. Nobody can afford to miss 8 months out of a market. Whether it's up or down, you need to be dollar cost averaging, using those profit from puts at a lower price, even when the market sucks. With that said, I'm going to rip on my competition one more time. And the yellow highlights, without any context, random numbers like those in the header above do not carry much meaning. In this case, that sequence of random, useless numbers captures some of the expert 2025 predictions for the S&P 500 index returns from the likes of JP Morgan Chase, Morgan Stanley, Goldman Sachs, Bank of America, and RBC. With that said, yes, Hurley Investments. Well, actually, before I do this, out of curiosity, I'm going to throw a poll out to you guys. I'm curious to know, where will the S&P 500 end in January? Just as a heads up, today was a super tough day. Market went up and down. We ended the market today at 58.36, up 0.16%. If you don't mind, go ahead and click on, I want to see, where do we think the market is going to end in January? Are we still bullish? Are we still bearish? A new window should have opened up for you guys to take a quick vote. Knowing right now the market's basically trading out the middle one, 58.36. So if you don't mind, I'm going to leave it open for about another 25 seconds here. Take a vote. Where will the S&P 500 end January of 2025? 10 more seconds. I've only got half of you that voted. So for the rest of you, let's get some quick votes in. All right, here we go. 5, 4, hurry up and vote if you haven't done it yet. 3, 2, 1. All righty, 2/3 of you voted. A third of you are chicken. Pretty interesting. Basically out of 18 or 19 here, it looks like 3 of you are saying 55.75. 10 of you are in that 59.52, and another 5 of you are up at 6,100. So for the 3 of you that are at the 55.75, you think the trend has ended for the year. Basically, we've run too far too fast. The trend has ended, which is interesting because on some really crappy, high inflation and not really good production numbers, capacity utilization numbers, industrial production numbers, yeah, our growth numbers kind of suck. What doesn't suck are rate cuts from last year and employment, which shows you how many more people are coming back to the workforce after COVID. And not only that, but they're having to come back to the workforce, and they're doing it oh, come on, I'll find it later. But they're doing that, requiring people to come back into the office. So those of you that went to the 6,100 to the 59.52, you're saying, hey, the trend is still intact. Yeah, we kind of had a bad December. We had to pull back. We had a bad, we got a negative January only by 1.25% right now. So I get what you're saying, but you're saying, yeah, we're just going to go through a standard pullback, 3 to 7%. We're not going to go any more than that. We don't have anything on the horizon that looks super scary. That group of you that's in that upper amount, 88% of you, I think we'd go higher too. In fact, because we have such a good earnings season, typically this first quarter, my vote would be at 6,100 as well. I would think we would be at that 6,100 just because we're following the trend, and we're probably going to have really good earnings moving into the future. Hurley Investments can very easily make an earnings estimate. I think it was 6,880 end of 2025. And Kevin, how are you getting there? What numbers are you using that would justify you getting there? Great question. SPX. SPY. And this is the one that's the smaller one, right? They give it to me. It didn't give it to me, that dirty son of a gun. How was I coming up with that? Um, 27 times 243. Is that what I came up with? No, 247. $249. So all I did was I came up with 27 future PE, which is down from where the S&P is at right now. And I'm multiplying that 27, I think it was by 250. 252. 27 times 252. 6804. And all I'm doing is multiplying it by a 27 PE by 257 earnings per share. And that equals out to about a 9.1% growth over this last year. Relatively within line. It could be a lot more. Depending on where we see some things change, it could be a lot more. But that would be my expectation for growth, would be in the low single digits. It's 68.14. I think that ends up at a 14% growth for next year. Earnings are coming up. I have listed all of our earnings sitting here. AMC after market close, BMO before market opens. Some of them are estimated before the market opens, like Baidu, 226. I have our earnings dates here as we're starting to pay attention. We're already in the first week out of the 3 weeks of banking. Earnings season will start very quickly. Need to cut that one out. I already have it there. All right, briefing picture I have not put in here, which I will put in. Will our markets end this week? I'm going to say higher. It's based off of the earnings. Has nothing to do technically. Technically, we're bearish on the Dow Jones Industrial Average, caught in between the 50 and the 200 day. Simple moving averages. It's in no man's land. We are getting a bounce off of oversold, but I don't think that has any relevance right now. S&P 500, same exact thing. It is also bearish. If we're looking at the NASDAQ, same exact thing, but it's not no man's land. It just recently broke the 50-day. It is also bearish. Yes, good comment. Let me go back up and make that comment. I'm going to write that down. Yes. Yes. Growth will still most likely come from Magnificent Seven stocks. Yes, we are still leaning towards NASDAQ. As it's beat NASDAQ, I should make that a little different, index stocks. NASDAQ's beat the S&P 3 or 4 years in a row. We still are leaning towards the growth in that area. But financials should also beat the S&P 500. A lot of people ask, why don't you just go on the S&P 500? Hey, it looks really good after the last 2 years. I understand that. It won't look really good if the wheels fall off the bus. You'll lose half of your earnings. Well, we've been up, 45%. It'll give up more than it's been up. I want to stay protected. I'm not sold, nor would I bet the farm on an ending price of the S&P 500 being 68.04. We don't gamble. We protect. Does that mean you might not get some great returns in some up years? Yes. Does it mean you won't lose your shorts in the down years? Yes. So good question. Yes, I am still slanted to the S&P 500 being beaten by the NASDAQ. So we do have NASDAQ tech heavy positions in accounts. We are doing a bit of a flip. Where do you think the SPX will end in January 2005? We're up 2.4%. We're kind of leaning down towards 2.0. We truly don't know. We'll start to see this week as we have earnings on Wednesday on BlackRock, Citigroup, Goldman Sachs, Wells Fargo, Fuller, JP Morgan. Wednesday, First Horizon National, Morgan Stanley, UBS, United Health, Bank of America, Fast and Schlumberger on Friday. Very important week for PPIs. Bad PPI numbers are higher than expected inflation numbers. We're in trouble. PPIs on Tuesday, CPIs on Wednesday, retail sales on Thursday. You'll notice on retail sales that ex-auto is not significantly lower. We just came through Christmas. Of course, the numbers are going to be big. Most people do not go out and buy cars during December, so they're very even on their numbers. Building permits, housing start, cap utilization, industrial production on Friday. How are we looking to trade? A lot of things are changing. We are trying to back up the truck through the drop in December to add shares. We did do a good job of adding shares. Now we are protecting for Q1 earnings in 2025. That's all we're doing. We're just protecting. And yes, we are basically already protected. We'll probably have to roll some protection down to capture some profits. But that's all we're doing right now. We've already backed the truck up. We've already added some positions. Okay, huge number of news to share with you. The SEC writes off $10 billion in penalties the past decade. $10 billion plus have been put against businesses that will not be collected as those businesses have gone out of business. It's a record number of penalties that was fined in the last decade. But it's shocking that $10 billion is not going to be collected. The worst part about all this, they really need to go back and readjust these people's returns. A lot of these average returns that are for some of these ridiculous people, that's complete crap BS. They didn't go back and have them restate it. Those get to stay. We're going to fine you. We're just going to collect some money. Those bogus returns that you fraudulently created in Ponzi schemes, well, they get to stay as long as you pay our money. It's kind of a joke. I'm not a fan of the SEC. I wish they would do things right, more realistic. Obviously, they are finding those that are making very poor choices, but they're not fixing the problem, nor are they collecting the money that they should. Very interesting article on Lockheed Martin. Lockheed Martin scored a $15.5 billion F-35 plane contract. It's not huge, but it could be worth $1 trillion over the lifetime. It's pretty interesting. I really like Lockheed Martin. If they can follow through next week, good buying opportunity for entering shares. Goldman says market increasingly vulnerable to correction, recommends downside protection. It's interesting. I have this article in here, nothing more than to feed my ego, to show you even the big guys believe in protection. Downside protection. It's fun to see them actually listening to what I've been saying for a while now. JP Morgan tells staff to return to the office 5 days a week. The COVID blip is over. COVID is a bad flu. I find it very interesting that right now, I feel that it's starting off in financial markets. They're cutting the fat. No more of this, hey, take a day off, call it working from home. Most people, due to human nature, don't do a really good job working at home. They don't work an 8-hour day. Because they don't work an 8-hour day, the financials are done with it. COVID or not, get your butt to work so we can micromanage the crap out of you. 10-year treasury yield spiked to highest levels since 2023 after a highly expected jobs report. Yes, for a couple people that we had in treasuries, I was taking them off. I'm not a fan of a treasury, but higher pricing, this might be your second opportunity to get out before we go through another 1% rate cut, maybe in the next year and a half. Take advantage of that. The wildfires in Los Angeles. Insurances are going to get hit with hundreds of billions of dollars. Insurance companies are not a place to park your money over the next year. Unfortunately for the rest of us, expect higher insurance rates in everything across the board related to insurance. Life, health, casualty, property, they're all going up. This one kind of tickles my heart. Microsoft confirms performance-based job cuts across departments. This is the excuse to use to fire those DEI employees. This is the excuse companies will use to say, hey, you may be of different color or different thoughts, of different genders. You're welcome to stay as long as you perform, which is the way it should be. I think you need to protect genders. I think you need to protect races. I don't think it's fair for job performance or hiring to be based on race, color, gender, wokeness, conservatism. It should be based on performance. But this will be how companies cut off the fat. It's good to see it. It's only going to help overall numbers improve. Our Fed officials are worried about inflation impacts from the Trump policies, the Minute showed last week. Our rate cuts will most likely not come in January, will probably not come in March, but your June, July, August, September will probably be cutting quarter points all the way through. I still think we'll have 1% rate cuts. The Fed just has to feel comfortable with their new president and their new administration. And I'm not saying the administration won't screw up rate cuts. I'm not saying that. But I do think we have some worry now, and the rate cuts will not come as they are expected. Please read through this article. Biden signs an increased Social Security benefits for millions of public workers. I'm 50-50 on this one. I do think if you pay into Social Security, you should get it back down the road, plus some type of interest for it. Yes, and Social Security will probably be gone by 2035, if not sooner. And then I have an article in here I found interesting. Goldman's favorite themes for stock market 2025, how to play them. They do lean on the NASDAQ side, but I do have an interesting article here for you guys to go over. With that said, into our new year, any questions you guys have for me that I may answer for you today? We have a good number of people attending tonight. Who was it? I hadn't seen a couple of you for a while. Brian, nice to have you back. Been a while since I've seen you. Bruce Mormon, good to see you here. We've got the Kohler groups here. Always good to see you guys. Bosserman, good. Brentons are here. Lee, good to see you. Mary, Amy, David, and Dave, always wonderful to see you guys here. Rich, Russ, Stewart, good to have you guys here today. Victoria, nice to have you. And Stu and Stewart, we've got two here today. That's kind of interesting. Nice to see you guys here. Any questions you guys have that I can answer for you? If you don't, make sure you download the handout. Go to the handout section, download that Excel spreadsheet. You can fart around with it as much as you want to. I've made a couple changes tonight, so I will have it back again next week for you guys to download one more time. I might have a couple other interesting stocks on there that I will also put on, but do download the handout. Make sure to enjoy it, mess around with it, put some of your own stocks into it. You can get your numbers very easily from finviz.com. The PEs are listed. Let's go to something so you can see them. I'll pull Apple in here. The PE, getting these numbers, I do all my work, are listed right here. PE and forward PE, earnings per share, and earnings per share for the next year. Those are the four numbers that I'm looking at. Okay, no questions are coming in. So with that said, glad to have you guys here. Maud, I think I saw you in here today. If I haven't mentioned you, nice to see you in here. Guys, have a wonderful evening. This was one of the longer ones. Again, I will see you guys next week. We will definitely, I'll update that Excel spreadsheet a little bit more. We'll probably have somewhere between 90 to 95 total stocks on there that we're giving any real consideration on for this year. Again, apologize, I got sick, COVID, but it really kicked my butt for a good week, and I got a little behind. I'm grateful that Key was able to go over our processes last week so I could play catch up for the week I lost in the holidays being sick. All right, questions coming in. Nope, don't say anything. Have a good evening. Look forward to seeing you guys next week on Tuesday. As soon as I'm done, make the adjustment on the dates. You'll get an email that says there's been a change. And we are doing away with trade findings adjustments, but we are considering maybe a Wednesday morning questions and answers with a registered investment advisor. So we're still have some things up in the air. Guys, have a good evening. I look forward to seeing you next week. Thank you for being here. And until then, have a good night.